The U.S. Federal Reserve is set to deliver its third straight interest rate cut, and global markets are watching closely. According to market expectations, the central bank is likely to reduce interest rates by 0.25%, bringing the benchmark rate into the 3.5 to 3.75% range. But this decision is about much more than just a cut. It's about what comes next. Inside the Federal Open Market Committee, views remain deeply divided. One side believes rate cuts are necessary to prevent further weakening in the labor market. The other side warns that easing too much could reignite inflation. This is why experts are calling this meeting a potential hawkish cut. That means the Fed may cut rates, but send a strong signal that more cuts are not guaranteed anytime soon. At the same time, investors are closely tracking the Fed's dot plot, a key chart that reveals how each policymaker expects interest rates to evolve in the future. Meanwhile, warning signs are appearing in the U.S. job market. Hiring has started to slow, with recent data showing 218,000 fewer new jobs, while layoffs increased by 73,000. These numbers suggest the labor market may be losing momentum. On the inflation front, the Fed's preferred measure showed inflation at 2.8% in September, still well above the central bank's 2% target. Former Cleveland Fed President Loretta Mester says inflation remains too high for comfort, and policy may need to stay restrictive for longer than markets expect. Despite those concerns, most analysts still believe the Fed will approve one more rate cut during this meeting. Investors will also be watching for signals about the Fed's balance sheet strategy. Some expect the central bank to hint at restarting limited bond purchases to stabilize funding markets, but not at the scale seen during quantitative easing. The stakes are enormous. Today's Fed decision will not only shape the future of the U.S. economy, it will impact global stock markets, the U.S. dollar, gold prices, and investor confidence worldwide. Now all eyes turn to Chairman Jerome Powell's press conference, where his tone will matter just as much as the rate cut itself. Will the Fed sound dovish and supportive of more easing, or hawkish and defensive against inflation? That answer could decide the direction of global markets for months to come.